Hi guys, this is Zach. Today I have a pretty fun video. I'm going to talk about fractal patterns, how I use concepts that you find in nature in my day trading. So to begin, what is a fractal? Well, let's keep it simple. Fractals are just patterns that you see repeat on multiple scales. In trading, it's time frames. In nature, it's size. Um, you can see fractals in seashells. See, this is the same thing, just repeating itself constantly. In pine cones, in snowflakes. I was even looking at Google Maps or Google Earth, and I just zoomed into the desert in Algeria randomly. And you can see that even the terrain of the desert, the terrain of the earth, is a fractal. So if I slowly start zooming out, you notice that it's the exact same thing no matter what scale you look at it from, right? Everything is a fractal. Um, how does this apply to markets? Well, first let's talk about candlesticks. This here is two sets of the exact same, two representations of the exact same data. So this is a 30-minute representation of the exact same price data. This is a 5-minute representation. Now, on a 30-minute candlestick, it looks very smooth. We have a wick, we have an open, we have a close. Very simple. But on a smaller fractal, you can see we opened here, we went all down, we found a low, we claimed back, we breached that, and then we went high. There's a lot more information on the smaller fractal. And what we can do is we can use the smaller fractal to play the bigger fractal and find asymmetric risk to reward opportunity. So, auction market theory, right? This is one of the core philosophies I build my trading around. If you're not familiar with what this is, I have a video called Auction Market Theory for Dummies where I kind of break down this concept. But just to gloss over all that, really simply put, if the markets are fractal, like I was showing right here, you can zoom in on these concepts, like a play right here, a play right here, a play right here, a play right here. You can zoom into these plays. Let's assume this is a 30-minute chart, right? A higher time frame auction. And you can zoom into a 1-minute chart and play this trade with a target of the 30-minute, but a stop loss of the 1-minute. How can you do this? Let me show you some examples. Let's go to Bitcoin. Let's look at a whoops. Let's look at a weekly chart fractal of Bitcoin. As you can see, we have two ranges here. We have one big range, which is the orange box, and we have one small range, which is the purple box. Now, if you look at auction market theory, what would you classify this as? It's pretty simple. It is a failed expansion. So the market had a range, and we tried to break away from the range. We tried to expand away from the range. We failed to expand, and based off of that, we're rotating back inside the range and to the other side. Now, how can you use smaller fractals to play this big range? Well, we know that when the price gets to this area, there's a possibility of a failed expansion happening. And what we can do is start zooming into smaller time frames to find these entries. So, well, not a 5-minute, but let's go to a daily chart. We know that once we get outside of this range, there's a possibility that we're going to reverse back. So when we're breaking out of the big range and I see a smaller range forming on top of the big range, I can build short trade here and here and here based on auction market theory concepts to play the big range. And the beautiful thing about this is that my stop loss will be, let's say we're doing, we have an auction here, and then we broke away from it, and then we retested it right there, and we're selling. Let's say we played the expansion, the breakout, right? Which is this right here, balance breakout. This one, we're just playing it to the downside, but same concept. You have that, and then you break out, you retest, and you're going. We can find a stop loss using the smaller time frame, the smaller fractal chart, but a target of the larger one, and that gives us asymmetric risk to reward. So we're risking only that much, but we're making maybe 5 or 6 times as much money playing this range. So what you can do is find little ranges and see what the consequence of losing that smaller range will be on a larger range. Another example we can look at is we could go to crude. I was looking at crude a couple days ago with some friends, and as you can see, we have a range, right? Here's a range on crude. Range. Well, we broke away from the range, and then we developed a mini range. So we broke away from the big range and found a small range. Well, what you can do is build a position using the small range, right? Oh, I'm having a hard time drawing straight lines. You can build a position around the small range to play the big range. So how would I do that? Well, this one's pretty straightforward. I know a couple of my trading friends took this trade. There's your balance, your small one. There's your breakout. There's your retest. There's your breakout retest. Of this small range, your stop can be right there. So now you have a small range stop with a big range target. That's like 5 to 1. You know, so let's take a look. Say you just put it in the middle and you target. Even if you target just the range low, that's 3R. If you target the range high, that's 8R, right? Asymmetric risk. You can be right, you can be wrong a bunch and be right just once, 8 times, right? You make 8 times the money. So fractal patterns allow you to find really tight risk to reward so that you can maximize your upside. So now you don't have to worry about extreme win rates. And the beautiful thing about this is that when you do get good at it, your win rate actually improves as well. Like I probably have like a 40-45% win rate when trading like this, and my profit factor is extremely high, right? Another one was on ES. Today, let's talk about the trade we took today on ES. You can see that we have this range on ES, and we had this high we developed. This was prior day high, and I said in the pre-market, in my market blueprints right here, I said, I put it somewhere here. Yes, right here. So this was in the market blueprint. This was before the fact. You can see in this screenshot, I'm saying that if this high is broken, then we're likely going to start rotating into this HVN. And how I played this is, well, there's the high, the one that we were saying if it gets broken, we're going to rotate upwards. And once we start breaking it on the once we start breaking the larger fractals high, I start looking for smaller fractals. So we have 2 boxes here. Let's make the smaller box, let's just make it purple. So when we start breaking out of the orange box and I see the purple box developing, I'm going to use strategies around the purple box to play the breakout of the orange box. Here's your breakout. Here's your breakout retest. Breakout, balance breakout retest right there. You can see that right there. right? So breakout, retest, and now we're breaking out of the orange box, the one we just talked about, the big one, and we're breaking out of the purple one. So double confluence, but your stop loss is based off the small one. Now you have really tight risk to reward, and you're playing a target based on the big one, right? I ended up missing this trade specifically. I just wasn't able to pull the trigger quick enough to get great risk to reward, but they gave me another chance, and I bought it right there. I put my stop right under. I think it was 2 points or 2.5 points, something like that. And I started scaling out into this, and then eventually my trail got hit somewhere in here. But as you can see, I'm playing the larger fractal idea using a smaller fractal entry. You can see the trade right here. So once we start breaking that high, this one right here, and that's the higher time frame level as well being broken out right here, right? There's your first attempt. I wasn't able to get on board on this one. I took this one, and then I start scaling out as it goes up. My stop is right there. I think this was like 3 or 4 or 5 to 1, something like that. After everything, yeah, I think I risked 600 and I made 4,000 on this. So it's really good risk to reward once you start playing like this. And then once you start seeing the market through this lens, you can't really unsee it. You don't have to give yourself really wide stops and all that. Markets get easier to read on smaller time frames. Smaller time frame structure starts to make sense. So the final slide I have here is just asymmetric risk reward. That's what this approach provides you. My entries are based on lower time frame signals, but my targets and my overall ideas are built on higher time frame. So I'm using double confluence, triple really if you look at order flow, which I do. Yeah, triple confluence if you look at order flow. But yeah, this is one of the concepts I use in my trading. I hope you guys found that helpful. If you are interested, I have a Discord, so you guys can join that. We can chat. If you ever want to reach out to me, need some help with anything, just feel free to DM me and we'll chat. Other than that, I hope you guys found everything helpful, and I will catch everyone in the next video. Take it easy.